you say that yield curve is going to be negative. So I would just like to ask you, when in your previous presentation and previous slides, when you talk about that it's a robust employment increase, opportunities are there, and of course that US economy has done pretty well for employment, and growth is also rising. But in that scenario, how your predictions, or you anticipate that there will be recession?
Yeah, and this is part of what I call the cognitive dissonance of the markets, meaning like there's really good things going on, and you think, no way would we be anticipating a recession, and yet stock markets are forward-looking, right? They don't just look at this month's earnings or this quarter's earnings. They go, what does it look like going into the future, right? So you almost kind of discount what's happening now and look into what companies are telling you about their earnings, right? Guidance really plays a large role. That's an indicator to some extent of what the 2s10s is doing. The market, in the interest rate market, is saying, we're not sure about economic growth here. It is really strong right now, but we know several things are going to happen in the future. We know higher US interest rates will bite into economic growth. We know that will slow the economy, and we know the fiscal stimulus is going to wear off. If you read most economists that are out there, almost every single one of them will say, we expect to slow down off of these very high levels, or over 4%, back down into the 2.5% region. And if you look at the Dallas Federal Reserve's predictions, and even the Federal Reserve Board's predictions for 2020 and 2021, they're down at 1.8%. So while things are really kind of red hot right now, I would say, or growing very rapidly, we think into the future more when we come to the financial markets. So I guess that's kind of a long-winded way of saying there are things that are out there that don't seem to make sense, but they really do because they're so forward-looking. Even though we have a low unemployment rate and strong growth now, it's not likely to stay that way. As a matter of fact, unemployment and GDP are not leading indicators. They're lagging indicators, as far as I'm concerned. They really don't tell you about what's going to happen in the future. They tell you, they give you a snapshot of what's already happened. Is that helpful? Okay, great. Other questions?
So you can certainly see the part of the leadership that Chairman Giancarlo has brought to us by bringing Andy here. And we get these updates, not quite as extensive, every Friday morning from Andy and his team. And they just do such a tremendous amount to improve our knowledge of the markets. Because, you know, as we've been talking about this whole week, right, we've got a lot of lawyers, we got accountants, we got finance folks, economists, but having this insight really helps improve our ability to oversee the markets, to be sensitive to what's going on out there. So it really is great, and I credit Andy and the chairman for this. But Sandra, please go ahead.
Well, actually, your comments relate to my question. I wanted to know how you interact on a daily basis with the other areas of the CFTC. So I understand you have a close and direct report line to the chairman, but in general, how do you interact with the areas both to transmit what you are investigating, but also, you know, identify what are their needs in order to guide what you're doing?
Right, so what was really fun about what I've gotten to do is I've got a brand new group, right? So to me, I had to create a structure to make them successful and to get them to do what I wanted them to do, right? I mean, it's kind of like my children to some extent, right? Of course, I'm less successful with them than I am at anything else. But I think what I tried to do right away is to have early wins in the research that we did. And by that I meant this. I created a daily email that our team does on the markets, how the markets have moved, right? What is driving that market movement for the day, right? In the morning. So the chairman, all the leadership of the CFTC gets this email every morning. It's short, it's concise, it tells you how markets have moved and why they've moved. So that's one of the ways that we communicate. We expanded that to two times, one in the morning and then one in the afternoon. Once a week, as Kevin mentioned, we have something called a market review that we do 15 minutes, very short. All the leadership and their staff are invited to this, and they can dial in and see it. I did not do it this morning. I had my team do it, but that's every Friday morning for 15 minutes. On a longer-term basis, we do deep dives into the financial markets, so the dynamics market, structures, all that kind of stuff. Those are things we do once a month. Some of them, as I mentioned, are up on the website if you want to take a look at them. Then we'll have our group present them and go over those for the agency. Sometimes we'll do special projects, such as when we get certain events that are in the marketplace, like flash crashes and so on. As well, what we do, and one of the things that I've done, because of my background in the private sector, and because of my ability to know a lot of people and my connections throughout the financial markets, I spend a lot of time going out and talking to market participants. And it can be high frequency trading firms. It can be investment managers. It can be central bankers. It can be regulators from other countries. The FCA. Obviously, I've had some conversations with them recently. What we're trying to do is build this tremendous funnel, right? So that we take all this information, and I have my team do this too, and jump on phone calls. And what we try to do is we try to take all that information and filter it down into something that's digestible for the rest of the agency. Now, I will tell you, it's not easy. And the reason why it's not easy is because it comes back to trust. You have to engender trust to the people that you talk to. Now, I'm in a unique position because I'm not part of surveillance. My team is not part of surveillance, and my team is not part of enforcement. So if you're going to develop a group like this, I would recommend you hive them off or cut them off from that group completely and have them be a standalone group like we've done. The reason why I suggest that is because it allows you to talk to these people and say, hey, we're just trying to figure out what's going on in the markets. Would you mind having a phone call with us? By the way, you don't need your attorney. And the other thing I tell them is, whatever is said during these meetings, I will relate them back to the chairman. Unless you, and then I'm talking to the client right now, or the private sector firm, I said, unless you say something incredibly stupid, I'm not going to say anything to enforcement. We don't want to talk to those guys at all. We want to engender this trust between us. And the reason why we do that is because those guys are smart. They know a lot more than us. I mean, humbly stated, we're a great group. We're a tight group. We know a lot of information. We know a lot of people, but we're so much smarter when we talk to the private sector and get their input. That's really one of the magic, that's the magic angel dust that we sprinkle on MIB, is to be able to reach out to the private sector and say, help us out. Tell us what you see. Tell us what you anticipate going on in the future. That is powerful stuff. Knowledge is power. And it's powerful to help us do our jobs better, to anticipate problems. And I would say one of the things, and I can't speak much about this, but one of the great joys that I've seen since I've been here is what happened with Hovnanian. Take a look at that. We didn't bring enforcement action. We didn't do anything like that, but they changed their behavior because we were discussing it with them. Not my group. Enforcement definitely was, but it's a great way to show the government doesn't have to bring a lawsuit against somebody to change their behavior and let the market know that, that's probably not what we want to do when it comes to that area that you're in. It just makes sense. It's a very efficient way of doing it. It doesn't tie up resources. So to that end, what we try to do in our group is to really talk and spend a lot of time communicating with not only within the agency, but outside the agency as well. So my time's up. I'll be around. We're going to go on break now.
Yeah.
So I'll be around for a little while longer if you want to come up and talk to me. And thanks again.
Thank you, Andy. So let's just try to get a little bit back, because the chairman will be here at noon, they tell me. So to get a little bit back, why don't you just grab some coffee, 5 minutes, hit the men's room, ladies' room, and then let's try to start up in about 5 minutes. And don't forget surveys. Think about questions for the chairman. And